think, is the Trump inauguration. Those tariffs are, a wild card. They could happen at any time. If they do happen, that's why the traders were trying to front run it and get the silver into the U.S. The premiums on physical silver versus futures silver price have exploded because of that. And they want to get their hands on that silver to avoid the tariffs, because that could really potentially sink, in fact, some big players. I think some important points in time in 2024 to mention are that silver really bottomed. I think it was late February, around $22, and then it started to run by May. I think it was high 20s or $30. Went kind of sideways for a couple of months, and then by October had run to $35. And that was the peak in 2024. So from $22 to $35, I think it's roughly about a 40% gain. That was quite nice. It dialed back. We're still around the $30, $31 level. It's still quite impressive. Companies are able to feel more comfortable and make reasonable profits at those levels. Not gangbuster profits, but they're a little more comfortable. I think that it had kind of gotten a little bit ahead of itself at that $35 peak. I think that given the setup right now, we have decent odds of returning possibly somewhere to that $35 level before the middle of the year. And that before we reach the end of this year, that we could probably touch potentially to $40 in silver. So we don't know yet quite the full 24-year numbers, but what's interesting is that solar has continued to grow. It is the single biggest industrial use for silver. It consumes about 20% of the annual silver supply, which is mind-boggling if you think about that. Whereas a little more than 5 years ago, it was just 10% of the silver supply. So solar remains important. On the one hand, I think that the growth will continue, but it may slow, so it won't be at the same pace of growth in terms of solar demand. And yet that's balanced by some things where if you look back at from 2010 onward, if you look at 5-year projections for solar installations, they were underestimated on average by 3 times. So that meant solar installations on a 5-year basis in terms of forecasts from 2010 onward were actually 3 times what the experts or analysts had expected. So that really tells you how a lot of people were caught off guard in terms of how much solar was going to be installed and of course the demand of silver for solar, where it's indispensable. And then you've got, I think that's going to continue, as I say. So although the growth may slow, the strength will stay there to some extent. Then you've got demand from things like AI for more power. You've got the demand from data centers, which are on top of AI, and then you've got Samsung, which has a new solid-state battery. Now, we don't have specific numbers. I've seen projections that are all over the map. I think it's from 100 grams to as much as 1 kilo of silver per vehicle. But if it does pan out, and it looks very promising, if this solid-state battery is adopted, and it looks like it'll be mostly because it's an expensive technology, which makes sense, it's early, more in higher-end vehicles to start with, but it could really be a game changer because the range of a vehicle with solid-state batteries is up to like 800 kilometers versus maybe 400 kilometers, so it's doubling the range, and that will really remove, I think, range anxiety from EV owners, which is a big deal. And also, the recharge is 9 minutes, so that's fantastic. That's almost like going to a gas station and filling up. So that really makes it a lot more lifestyle friendly to what we're used to with regular internal combustion engine vehicles. So that's interesting. And as I say, we don't know how much silver will consume necessarily, but the projections are pretty high, and that could really also feed into a lot more demand of silver. I agree. So we've seen, if we look historically, silver has underperformed gold through recessions. long term in bull markets, it outperforms gold, but through recessions, clearly it has underperformed. Is this time different? Hard to say, but if you look at some of the drivers, I think there is that potential that it will be somewhat different. And I think solar is a big reason for that. So let's break it down a little bit. If or when, I think it's a question of when we hit recession. I think that's, we may be in one. It may only be declared officially at some point a little bit later. I think before we reach the middle of this year, that's likely to be the case. Nonetheless, recession is likely to get market participants to say, well, silver is at least 50% an industrial metal. Maybe I don't want to own so much silver, and could that weigh on it? Well, I think, as I say, that the solar aspect of it is such a big driver. A lot of that is baked in. A lot of that is government driven in the sense that there are subsidies for solar installations in many places around the world. Solar is the cheapest new form of electricity, and so that's why we're seeing it adopted so widespread. And so, as I say, for these reasons, I think that could counterbalance a little bit of the potential pressure on silver selling because of its indispensable applications. And then coming out of it, so here's an interesting point, is that because industrial demand has grown so much over the last 5 years or so, we've gone from maybe 50% to now 60% of silver demand being industrial. That leaves less silver every year for the investment side. So when we know that the investment ebbs and flows, and when it comes back to silver, it can come back, as we all know, it's very volatile in a very, very strong way. We've seen silver squeezes before. We saw the action in silver last year. I think last year was driven by the market starting to realize that these annual deficits in the range of 15 to 20% are going to really start to weigh on the supply of silver. And because of that, they started to realize that, the supply of silver is very tight. We're consuming up to 20% more than we're producing from mining and recycling every year. The inventories are being drawn down. That's what kept the price from really going gangbusters. But it did run from 22 to 35. That was very strong. These kinds of drivers, I think, are going to remain. The silver supply is very tight right now. And there's talk from the US of potential tariffs on all sorts of things, on imports. There is some interesting research from TD very recently that said that the tariffs are, from what they see, actually driving a lot of movement of silver from London right now into the US because that's imported silver. As we're speaking, I think is the Trump inauguration. Those tariffs are, a wild card. They could happen at any time. If they do happen, that's why the traders were trying to front run it and get the silver into the U.S. The premiums on physical silver versus futures silver price have exploded because of that, and they want to get their hands on that silver to avoid the tariffs because that could really potentially sink, in fact, some big players. So all of these are in play. That is not something that has fully played itself out in terms of the risk with the tariffs. So the premium on physical is important. And so as we look out, I think that the market will remain tight, and that bodes well for higher silver. They're not looking good. They've been drained, and this started in early 2021. If you look at the inventories from LBMA, from New York, the COMEX, and from the Shanghai Futures Exchange, their inventories have been drained pretty dramatically to the tune of at least 40 to, in some cases, 70%. Just recently, again, I was looking at the numbers. LBMA, which is the bigger player in this sector, had a big drawdown again in December. Something like 23 million ounces came out of the LBMA. And so they're near their lows of the last decade in terms of supplies. So it's very interesting because in London, for example, there's about a total of 825 million ounces of silver in inventory. About 500, they're a big player when it comes to silver ETFs. That's where a lot of the silver for ETFs is stored. And so about 525 million ounces, so 60% or so of their silver is already spoken for silver ETFs. That leaves about 300 million ounces. Of the 300 million ounces, about 250 million ounces every day are required for trading, to settle trades and so on. So the buffer is only 50 million ounces. That's historically low. And so if there's a big demand for deliveries that continues, that could really start to squeeze that even more. And so it is becoming kind of precarious that way. That's an interesting point because not always, but I think given the last cycle, a lot of these producers have become gun shy. So they're not as willing to understandably invest a lot in large projects. And so I think that they are, if anything, looking more to acquire existing projects to build back reserves that they're depleting. I think they need to see high silver prices sustained for a while, probably even as much as a couple of years before they feel confident and comfortable enough to start investing again into projects that are already profitable, and even more so in projects that are becoming more sort of marginally profitable. So they need to see these higher prices sustained for quite a while before that's really going to start to make a difference. I saw some research, I think it was Bank of America, that looked at mine supply from primary silver mines, and that actually peaked in 2016. So although demand has continued to grow significantly and we're in deficits, mine supply has actually not only been flat, but it has actually fallen since 2016. And we're talking about a 1% up, 1% down over the next few years. They think that out to at least the next couple of years, we're going to see mine supply completely flat. So we're not, recycling might contribute to some extent, but it's only about 15% of the supply market. Really, the only thing that there is to look at is, we talked about the secondary supplies, and perhaps difficult to quantify privately held hoards of silver. Now, my argument about that is that, yes, that can certainly come to market, that can help ease supply constraints, but you have to ask yourself at what price level. So a lot of these are stackers, a lot of these are people who've bought the silver as a chaos or an inflation hedge of different kinds. And so I think they're going to need to see silver at considerably higher prices, and I think that's will help in part at least drive silver higher. So one interesting point, I went back and looked at some of these numbers recently, and it was the Silver Institute's forecasts when they come out with their World Silver Survey. That's in April every year, and then they do an update in November. And what I noticed was that they had actually expected that investment demand would be down, which it probably is, at least anecdotally, what I'm hearing, that makes sense. So that the deficit would be, initially they thought it'd be about 215 million ounces. They revised it to about 180 or so million ounces. But there's another line item, and that is investment into silver ETFs globally. So in their April report, they had expected it would be about 50 million ounces would flow into, which is sort of medium, not especially strong, a little bit weak. But in the revision in November, they doubled that to 100 million ounces. So if you include the deficit by including the line item of flows of silver into ETFs, we're actually going to be, for 2024, at the second largest deficit we've ever had. The 2020 was 300 million ounces. 2024, with that in mind, if they're close to the final numbers, is going to be about 282 million ounces. So very robust, looking very tight, and I think, again, bodes very well for the outlook for silver.